Yeah, we take a look at the 3 to 5 year view of mobile banking with respect to mobile commerce and bank initiatives. I think there's a couple of things going on in the marketplace right now that are of interest. Banks have already taken a plunge into banking applications. Many banks have invested in mobile enabling their online banking functions and information access functions with SMS balance inquiry capabilities and other applications. A lot of these don't take advantage of some of the overall value of mobile, especially with respect to immediacy and remoteness, but there's certainly steps that are establishing banking functionality in the space. We're also seeing some other interesting applications around point-of-sale devices, both with the mobile device or the phone being a point-of-sale purchase device in lieu of a credit card, for example, and also even with some initiatives where the mobile device is a point-of-sale device. It's not clear where the value is for banks with those initiatives or even what role banks will play, but we do see those emerging segments of the industry having some bank participation over the next 3 to 5 years. We think that the real opportunity for banks, though, is in the remote and immediacy aspects of mobile, especially with respect to check and cash replacement. If you take a look at the marketplace, 75% of consumers say, according to a Notcha survey, that they would prefer to use a mobile device in lieu of a cash or check transaction. Gartner's predicting that in 2012, the top 2 bank investments will be in mobile payments and in mobile account transfers. We have 70% of merchants are unacquired, so small businesses taking payments without the use of credit cards. So if you combine those opportunity components into a path for banks to look at, I think that there's an opportunity for banks to use mobile as a leverage point to win a new segment in the space and provide a value service which leverages the consumer trust in banking and which gives the bank a role in the transaction side of the mobile commerce value proposition. If we look at the bank industry with respect to top opportunities for gaining market share in mobile commerce, we would suggest that there's some opportunities for how banks approach the market that can be significant game changers in the overall position in the space. And I think the first suggestion we would make for the industry is to act immediately. And the big risk right now is that non-banks are entering the space. If we take a look at Canada, for example, ZoomPass, which is a consortium of 3 carriers in Canada, have introduced a mobile payment service. It's in production, while the 5 big banks in Canada are sitting on the sidelines. In the United States, AT&T, Verizon, and T-Mobile have announced an alliance considering bringing a service to market. PayPal is already established in the space, and we can expect that other non-bank players are looking at this space as an opportunity to gain presence. So I think banks need to act with immediacy and act now and gain some presence in the marketplace quickly. Secondly, banks should identify new niches. Look for opportunities that aren't served through traditional channels, where mobile especially can provide leverage. So some examples might be the underbanked segment, the family money or the youth segment, movement of money between people, unacquired merchants, the social network segment, where people are using payment services now to facilitate payments in the world of online gaming and other social network transactions. So look at segments and develop use cases or value propositions for those segments that especially leverage the immediacy and the remote transaction capability of mobile. Thirdly, build functionality that leverages that capability. So the ability to send money instantly is significantly important, for example, to an unacquired merchant. The ability to receive money instantly is also significantly important. So develop a use case that leverages the abilities that mobile provide to make the solution to the consumer or to the, in the case of the unacquired merchant, the solution to the market have significant value. Those values in turn generate fee income, and that's probably the fourth important component to think about is what are the opportunities that can generate value to consumers and fee income to the banks and financial institutions and bringing the services to market. With respect to that, I think the banks need to step back and take a big vision as to what we would like to accomplish with our movement into this marketplace. And I would suggest one might be a big vision around cash and check replacement, so that the bank has a 3 to 5 year view of how to achieve something in the marketplace that's game-changing and changes the way that consumers do business, that takes advantage of bank value add. This is something that needs to happen in 3 to 6 months in terms of immediacy of action for the banks, but to achieve 3 to 5 year type of results in terms of the overall value to the industry. So an example of where this comes into play, I use Obopay to pay my housekeeper. Now, my housekeeper is an unacquired merchant. She has a personal account, but she uses that for business. She has about 40 customers. She's receiving 30 to 40 check transactions a month. One of her problems, and it's a problem we help precipitate, is that people forget to leave their checks. And one of the reasons that we started using Obopay to pay her, so that when she had a check not available, then she had to phone to follow up for it, and it was typically 1 to 2 weeks before she got paid. So it was a significant frustration point for her. It was also a frustration point for her customers, because they would typically forget checks and then have to go through an extra effort, including mailing something to pay her. So the Obopay solution is a good way for her to take advantage of that, and it addresses all of the points about an action plan for banks. Addresses a unique market, takes advantage of mobile, takes advantage of immediacy, and provides a solution to the consumer, and that consumer solution has financial value, so fee income is something that would be expected to be associated with it. Obopay is an innovator in the mobile payment space. We pioneered mobile money. We've been in production in the United States for 5 years with a mobile money service that lets people send money from their cell phone and receive money through their cell phone. Of interest, we're also operational in India and Africa. And we go to market in conjunction with partners such as MasterCard, Societe Generale, FIS Global, and Nokia. So we have established presence in the space with a pioneering focus. One of the reference points for our activity in the United States is our primary focus on going to market in conjunction with bank partners and financial institution brands. So the significant innovation functionality that we have in our service to facilitate that is a brandable service that can be brought to market on behalf of a bank with an operational and in-place payment service. So with that, we have all of the money transfer licenses in place. We have the mobile functionality in place, including triple play functionality, for example. So we support SMS, we support mobile WAP, we support mobile download clients like the iPhone application. So a bank can turn our service on instantly with the bank brand without having to do any investment in infrastructure or support. A couple of aspects of that that are important. One is the ability to go to market without having to do extensive integration. The other is the ability to go to market without having to make significant investments. So that gives the banks the ability to be fast and quick to market with a solution that's innovative and leading edge. A second component with respect to consumer success is, and this is supported by some recent research we did, where consumers, more than 3/4 of consumers said that they wanted instant capability with respect to their mobile money transaction. So with that as a backdrop, the ability to facilitate the instant send of money using a mobile device, and as importantly, the ability to receive money instantly is very, very important. So a couple of examples of that, maybe an extreme example, but one that many parents can appreciate. My daughter is 16, she has her license, she runs out of gas, but of course she's 16, so she has no money. How do I get money to her in a way that she can use it to either get cash at an ATM or to facilitate purchase at a gas station? So the ability to send and receive that money instantly, even though I may be in California on business, is very, very important to the consumer value proposition. So the instant send, instant receive support is a critical success factor for consumer adoption. One of the challenges with respect to the financial institution adoption is how do we address the challenges with respect to regulatory compliance, integration into our core systems, et cetera. So one of the things that we've done is we've developed a flexible approach to the integration of the Obopay service into the financial institution core, through to what we call a standalone service that brands the solution, through to web services integration that let financial institutions bring the capability into their own solutions offerings. So all of that, it can be delivered in an environment that supports what we call a pay anyone model. So the bank does not have to worry about settling with an unknown recipient. So someone can send money instantly in the Obopay world to anyone just by entering their mobile phone number into the payment instruction, and then we at Obopay support the payment of that money even to an unregistered recipient. So the bank does not have to invest in the risk and settlement and compliance infrastructures needed to support that capability overall. So those are some of the significant things with respect to bank deployment and consumer functionality. One of our learnings in some of our early trials with banks is there are some use cases we call, or uses of the system that aren't necessarily what we anticipated when we first came to market. And one of those was the use of the service by merchants to facilitate fast settlement of money. So we saw a lot of usage in that with some of our early trials. So we developed some tools around that, which we call get paid functionality, that lets consumers or unacquired merchants use the service to facilitate getting paid. So there's a request money function, for example, so that a consumer can ask for money. There's a mobile invoice capability. In addition, we have some tools, widgets, buttons, payment links that consumers can post into payment environments, into social networks. A payment link could be put into an email, for example. One of our customers uses that to solicit payments from sports association members so that they can pay the dues for their soccer association through a payment link that's embedded in an email. That makes it easy for a lot of people to make a payment and makes it easy for the sports association to collect money without having to have a cash or a check type of collection effort. So those innovations are significant in terms of banks being able to provide consumers and small businesses with value in terms of an overall mobile payment capability that leverage the value of mobile, the immediacy and the remote factors that mobile brings to the opportunities. We also of interest have a text-to-pay capability so that a consumer or a small business can have a text-to-pay keyword, and that can facilitate the receipt of money, or in the case of nonprofits, the receipt of donations through a simple consumer text-to-pay, and that's an unregistered payment. So we facilitate essentially a P2P checkout or a social network checkout to facilitate those payments. So all of those together provide a very compelling experience for consumer use cases and provide the bank with value-add capability that has fee income opportunity associated with it. So for a bank's specific recommendations around pursuing opportunities in mobile commerce, 3 things we would suggest banks look at. And the first would be in terms of a speed to action recommendation, and that would be to act in, for sake of a term, mobile time rather than traditional bank time. I think we need to make mobile decisions in the 3 to 6 month time frame rather than the more traditional 3 to 5 year time frame. And we need to deploy solutions quickly, even if they may not be necessarily the right solutions, but we need to start taking some actions and gaining some presence. So my first recommendation would be to think fast and act fast in a mobile time frame. Secondly, I think we need to break the mold. Rather than looking at mobile as another channel, rather than looking at mobile as an enablement of existing online banking transactions, look at mobile as a way to provide something disruptive to our market, to win new market share, to provide a more compelling solution to our consumers, and even better, to win new business and new segments that don't exist right now. So break the mold. Look for opportunities to bring service to market that no one's doing right now. So an example might be P2P checkout for consumers. It's brand new, it's disruptive, it breaks the mold, and it can drive consumer demand. One thing we've seen in mobile is that consumer demand doesn't necessarily exist because consumers don't know the capabilities that are available, but we do see that when organizations bring solutions to market and make consumers aware of it, we can see dramatic increases in usage once consumers receive value for the functionality. So breaking the mold is important and looking for disruptive technologies rather than adding to channel capabilities. That would be very important. Secondly, throw some lines out, to use a fishing analogy. Put some applications in market quickly, get some usage experience, learn from that, and use that usage experience to build your vision for 3 to 5 years. So there's absolutely nothing wrong with deploying instant send, instant receive P2P in a 30, 60-day time frame to a target demographic or a target market, gain some experience with that space, add social network payments, add get paid tools, add some functionality around the unacquired merchant functionalities, and take learnings from that to help build your model for value-add services that will drive revenue and income to the bank in the mobile space. With respect to bank adoption of mobile applications and mobile commerce initiatives, I think a lot of banks have taken some initial steps in that space. We see a large number of mobile banking deployments, especially with respect to SMS balance inquiry type applications and some initial web enablement of mobile banking. Mobile banking is one of the top 3 investment areas for banks in the next couple of years, so there's a lot of focus on it in the banks. What we aren't seeing yet, though, are investments in the complex areas of mobile transactions, and especially in the space that Obopay participates in with respect to mobile payments and mobile transactions. A couple of reasons for that, I think probably most significantly, is understanding of risk. Anytime you introduce payments into a bank scenario, there's a risk factor that needs to be understood, managed, allowed for, and policies, practices, and procedures put in place to allow for it. Secondly is complexity. When you introduce payments, especially in payments crossing networks, there's a degree of complexity that makes it harder to implement typically. So some of the things that we do to help alleviate these obstacles for banks with respect to risk, for example, our model is a model where Obopay is able to take risk on behalf of the banks. Because we're an established payment service, we're able to take some of the load off that. We also have risk-sharing models to let the bank participate based on the risks they want to take and the transaction types they want to deploy. So we're trying to make it easier to overcome some of these obstacles to help faster deployments in the space. With respect to payment complexity, because we're a licensed money transmitter, because we have established infrastructure, and because we have integrations in place already with payment networks, we're able to facilitate transactions on behalf of the banks without the banks having to invest in those infrastructures and those services themselves. So there's a couple of things that we can do to help banks overcome some of those more traditional obstacles. I think also banks have a focus on channel delivery rather than on transactional services, and we would suggest that a shift in that focus, transactions will translate to value to consumers, which will translate to fees, will provide an overall better value approach for banks to take in the market, and a little easier to overcome some of the obstacles with respect to risk and complexity, especially when there's an upside in terms of consumer adoption and fee income.